Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. To open today's webinar, the Australian dollar remains negative after last week's whipsaw price action rejects that 77 cents region for about the 14th time and now records a low around 75.20 on 24 on Friday. With the objective reached of 75.0535, further risk is seen to the downside. Reason behind this is that the oscillators from the stochastic and the MACD, especially from the histogram on the MACD, is weak. A break beneath 75.05 would give further scope towards 74.70 with an objective of 74 cents. In the interim, upside risk should remain capped around 75.85 to 76.30. With the dollar index regaining very firmly towards last week, saw the euro reject that 111-112 level and now reaches its objective of 108.2035, now trading at 108.26. In light of the current pattern, and especially if we look at the weekly, further weakness is seen from a break of 108.20 and we could be looking down towards 107.40.70 and reassess from there, as we may even be looking down towards the 104 region, which was last seen in February 2015 and also late that year around November 2015. So I'm rather negative for the euro, purely for the fact that the dollar index is very strong, and especially on the weekly close of last week, does emphasize that we should see further dollar strength in the coming near term. Resistance on the day is now caps around 108.90 to 109.60. Dollar yen still very bullish. Since rejecting from that 101.0530 on Wednesday, the market still looks towards the resistance of 107.2035. Now it is from there, a break above there should trigger the last round of stop losses and see a move up towards 107.90 to 108.15 or even higher up towards 108.65.70. In the interim though, any pullback should find support around 106.30 to 105.75.90. Sterling, the last few days of strength, mainly on the back of euro sterling breaking down, saw a rejection of 126.72. Now, from that rejection could be a sign that the exhaustion is setting in from this rally, and we could see a retreat from current levels around 125.60 down towards the support of 124.55.65. A break of 123.50 would give further weakness towards 122 and lower towards a Brexit around 118 to 120. On the top side, resistance still seen firm around 126.45 to 75. Gold takes another heavy beating on Friday after first of all breaking that 1260 support and now takes out that 1240 level, which gives further emphasis to the downside and looks towards a target of 12 figure to 1207. In light of the current weakness, and especially on the dailies as the market breaks down further, we could be even looking at towards a target of 1,050 to 1,150 if we see a break of 1,200. So do keep that in mind. On the top side, resistance comes in now at 1232 to 1236. And to wrap up with oil, after one day of demand last week, now turns or shifts the focus back towards that $43 a barrel level. In light of the current pattern, it is a little bit concerning that we're not seeing any demand. So a break of 43 would expose a target of $39 a barrel, which was seen back in July this year, and reassess from there. Any advances on the day should come in towards 44.45 to 45.20. That brings a wrap to my daily video. Thank you very much for joining me, and I hope you enjoy the day ahead.